All right, what's up, traders? Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. We got a little bit of news going on out there, as in Bittrex filing bankruptcy. Seems like the hits just keep coming for the crypto market, and yeah, it's not really the greatest of news at all. I mean, when we lose exchanges, it's typically not bullish for any price. All right, so first let's talk about this real quick. Forget about all these lines. I mean, I'm currently watching this old resistance level right here, as that's where Bitcoin's current daily high is. So we'll watch that level for a potential sell. I mean, it's a very small range. I don't expect there to be a whole lot of price action today, because tomorrow is CPI, and CPI is probably going to be a range-breaking newsprint tomorrow. So we'll keep our eyes on this level right here and see if this ends up holding price. But for now, there's also the old support right there that you broke down from yesterday, 28.077. If you lose this area right here, this is the next area where short sellers will start to kick in. Obviously, if you're bullish on the asset, then you will be looking for bullish entries. You can see currently The point of control is setting right there at weekly support. That's today's point of control, setting at weekly support. Also, yesterday's point of control is setting roughly at the midpoint of yesterday's candle. So there is a possibility that you do wick up to 28,077. And then tomorrow, when we get the CPI print, considering what we did last month, we'll probably see Bitcoin break down, either to take out liquidity and then go higher, or break down and go lower. All right, so last month on the 12th of April, that's the 12th of April. This is when we had the last CPI print, and CPI dropped from 6% all the way down to 5%. That is the biggest drop that we've seen in inflation since the 9.1 high tick. All right, since the 9.1% high tick, we've been trending lower, and from 6 to 5% was the biggest drop that we've seen since June. All right, since June. So that should have been like uber bullish, right? Because inflation is not only dropping, it dropped by a substantial amount, a whole percent. Now we are expecting this to stay the same. So we dropped from 6% down to 5%. Now what we're expecting tomorrow is 5%. So typically anything higher than that is going to be anticipated as bullish for the dollar, aka bearish for risk. Anything lower should be considered bearish for the dollar, aka bullish for risk. But you can clearly see that that's not always the point, or that doesn't always happen, as we did have this, and then this is what we ended up doing on that day. And it wasn't as volatile as you would think it should have been. Then the next 2 days we were bullish, boom, boom. And then that's basically where it has topped out. And you can simply see that anytime you've gotten into $29,000, you have had massive volatility back to the downside. All right, so here is a bullish engulfing in a bullish trend that was met with sellers. And then you had 3 days of 3 days of continuation. Then you consolidated at the lows, and then looked like you were going to have an uber bullish day. And then this ended up being a massive selling candle that dropped all the way down to there. So it bounced back and closed here, and then we had another bullish day. Next wick gets back up into 29.5. Same scenario, big sell event, boom, boom. And then this last time, got back up to 29.5. What happened? Boom, 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 3 days. So clearly, this is where the sellers are. There's no doubt about it, right? It's easy to consolidate above a supply area, but naturally, if demand dries up and supply overtakes demand, then you will get prices moving lower to find demand. The fact that we had such aggressive downside moves each time price got back into this area suggests that there's big selling going up there. That can be profit taking as well as short sellers setting up. Someone posted yesterday in the Discord that, let me go see if I can find it, how many people are actually short. Just give me 1 second as I scroll. Yeah, I don't see it. Somebody posted though, and it was a lot. And from COT data, that we also know that most people are short the regular risk markets as well. So a lot of people short, even though inflation is coming down. So I thought ultimately that would end up being bullish as long as inflation continues to tick lower. Then that means that the Fed's rate hikes would ultimately begin to pause, right? If you look at the CME watch tool, they got for next month, 14th of June, this will be, as of right now, the market is currently pricing in an 83% that you're going to do nothing. Our current range is 500 to 525. So this means basically a pause for next month. This can obviously change depending on the data that we currently get from now until then. But if you go to September, you can see that the market, as of right now, like I said, obviously this will change the closer and closer you get to September because more data points will come out. But as of right now, if everything remains the same and the metrics that this uses to basically price in this model, you can see that there is a 48.4, and this has moved up since the last time I looked at it. The last time I looked at it was 47.5%. So now there's a 48.4% chance that not only do we pause, we actually cut rates. Now, if the Fed starts to cut rates based on inflation getting closer to their 2% target, that would be considered bullish. So context matters in this, right? It's all about the context. So if the rate hikes if the rate hikes pause because we're getting closer to their 2% inflation target, that would be considered bullish. If there is a pause and rate cuts because banks are failing and they have to do that in order to stop a massive onslaught in the banking sector, that would be bearish. All right. So when the Fed pivots or when they pause or even start to cut, the context of that pause and cut will be very important. All right. Very important. But you can see this has not been bullish. All right. It has not been bullish. That was the last CPI print. So the next CPI print is tomorrow, which is why I wasn't expecting a whole lot of volatility. I have a short limit order that was just filled on Bitcoin at 27.9 or 27796. My glasses got broke yesterday, so bear with me. But it looks like 27796 is where my limit sell was. That was this area here. I have a stop loss setting just above it. It is 919, so there is potential for a spike higher to take out the current high of day at the market open. So I currently do have that situated, and I am currently in a little bit of profit, as you can see how price tagged that area and is pulling back just a little bit. Now, this is not the reaction I wanted to see, obviously, but it's still early and there's a lot of time left on this candle. So yeah, if we go and look at the dollar, I posted this. Not a lot of people understand it, I guess, because it didn't get a whole lot of reaction. But right here, if you go to April 12th, right there, that is, this is the dollar. So you can see literally the range that the dollar has been in since the last CPI print. Literally been range bound. That news should have been bearish for the dollar, right? A whole percent drop. So that should have caused the dollar to break down. Ultimately, the dollar did break down and it did liquidate this swing low. So you did get a bounce. This is the lowest swing low for a long time, right? Until this swing low here, which is all the way back to April 22nd. So a year ago. So you made fresh yearly lows and then you got a bounce. But the bullish bounce wasn't big. and then you've essentially been trading in this range since that last CPI print. So you can see how tomorrow's CPI print could be very important. It could mean that the dollar breaks out of this range. Now, this formation that the dollar has put in here is a downtrend. Obviously, this is your yearly opening range, yearly high. This was your yearly low. You have set a fresh yearly low, so it's natural to get a bounce and consolidation at that area. It's a big area, but it is also creating a bullish pattern. So whenever you do this, it is looked at as a bullish pattern. It's considered a descending wedge, which is typically looked at as a bullish pattern. So if you break out of your descending trend line or your descending wedge formation, then people are going to expect that to be bullish. So we could probably see a retest of the 2023 yearly opening. And if that occurs, the Bitcoin is likely going to go lower. Right? All right. So let's see what happens tomorrow. All right. So clearly this chart looks god awful. So let me clean it up for you a little bit. This was the near term wedge that we were looking at. Yesterday you broke down and it was a clear breakdown. This is this support. This is the area that I sold. This right here is weekly support. This down here is daily support. So quite a lot of congestion here in this area. So what I'm thinking is if we get continuation of downside beyond this price right here of 26,525, downside continuation, then that means that we're probably going to go down and test the midpoint of this bullish candle right here, this breakout candle. So once again, if we lose 26,525, which is this white line, my next area or my next downside target would be roughly the midpoint of this big bullish candle. That would put us at roughly about 25,299. And if I pull up the 21 exponential, which is this yellow line right here, you can see it comes in pretty damn close to that confluence. So there's confluence, essentially. It comes really close to that area. This is on a weekly closing basis. I do not want to see weekly closes under this 21 exponential moving average, at least not more than 3. If I see 3 weeks close under this, then that is going to be pretty much consistent with us looking for lower prices. Now, we have already started our shorting process because my strategy says that on even a daily closing basis, if you get a close below the daily 21, then you can look for near-term short day trades. Day trades. That's the key, right? Looking for day trades because you're still on the longer times, the longer term candle size, your monthlies and weeklies are still structured bullish from the yearly open. So it's only until you get under the 50 on the RSI or under the 50 on the weekly time frame that I start to change my bias, my longer term bias. I do not want to see us lose the 50 on a weekly closing basis, right? Retest of it, in my opinion, wouldn't be that great either, just to be honest with you. So we'll see. We'll see if this thing is able to find support. We have big news in the form of Bittrex. Some of you probably have or are using Bittrex as an exchange. Now, we are currently in the US, we are losing our means to exchange based on Coinbase looking to move. No one's heard anything on Kraken just yet, but the US is targeting, or, the SEC is targeting basically every crypto exchange in the world, essentially thinking that they can sue them. So it's causing a lot of problems on that front. But here is the article right here. Another crypto exchange, Bittrex, files for bankruptcy. Bittrex, which was also sued by the U.S. Securities and Exchange Commission, the SEC, Gary Gensler, to be honest with you. turncoat, has more than 100,000 creditors with established liabilities and assets both within the 500 million to 1 billion range, according to a court filing. Crypto exchange Bittrex has filed for bankruptcy in the U.S. months after announcing it will shut down operations. Bittrex, which was also sued by which we just read, all of that. Having previously announced that Bittrex Inc. would be ceasing all operations in the U.S. effective April 30th, we have now made the decision to file Chapter 11 bankruptcy in federal court in Delaware, the crypto exchange said late Monday. Now, this isn't going to affect Bittrex Global, from what I come to understand, but just basically any Bittrex that's going on in the U.S., right? That's filing bankruptcy. It's going bye-bye. So essentially, the United States of America is losing all means of exchange, which in order for Bitcoin to be considered money, you must have a means of exchange. That is what basically makes it money. Without the means of exchange, it is not money. It is effectively useless for U.S. citizens if we cannot safely and legally get on board with Bitcoin. That is also going to cause a lot of problems in the future because all of your U.S. investors, your billionaire investors, your money hedge funds, banking funds, everybody like that is not going to be buying Bitcoin because it is illegal for them to do so. There goes a lot of demand. And you need the U.S., in my opinion, to approach all-time high levels again, because you need that market cap for the price to go up higher. The demand has to go up. These candles aren't little magical things that just happen. It's about how much money is in the asset. That's what controls whether it goes up or down. Market cap, that's what controls the asset's value. The more demand that comes in, the more money that comes in to the asset price goes higher. The more money that gets out of the asset, aka selling it, or even short sellers, will cause supply, which will make the asset's price go lower. So we need to have exchange in the U.S. that's legally allows U.S. citizens and firms to effectively invest in Bitcoin. Now, there's always going to be people that love Bitcoin and that are going to stay invested in Bitcoin based on the simple fact that they think that, Bitcoin's going to be worth billions one day. I think Bitcoin could be worth $1 million in the future, but it has to be not necessarily regulated, but it definitely needs to have the U.S. on board, right? The U.S. has a lot of money. So without the U.S. on board, I guess Bitcoin could still move up, but it's not going to be as easy as it moved up in the past during its bullish market phases, which obviously, if Bitcoin continues to do the same thing, will be around the next halving, right? The 4-year market cycle. I'm sure everybody by now is clearly aware of that chart, clearly aware of that fact that it has essentially played out for Bitcoin's entire history. The only thing that's different this time around is the fact that we do have someone in the SEC that is literally trying to attack not Bitcoin itself, but the exchanges that allow U.S. citizens to be able to participate in Bitcoin. So we'll see how that plays out. I'm still invested. I'm still investing in it by trading it. And currently that short position that I have is working out so far today. The marketplace just opened though. So let's drop down to a smaller time frame chart. Let's see how this goes. This is roughly where my limit sell was. So not expecting a lot of volatility today. Like I said, tomorrow is the day where we will see a lot of that volatility come into play when we get the CPI data. And then right here, you can see this is what we are expecting. So you can see from March to April, you got a full drop. Last month, April 12th, they were expecting a big drop, 8/10 of, 8/10 of a drop, but it actually dropped lower all the way to 5. That should have been bullish, and it should have been bearish for the dollar. So that's what's got investors on edge right now. That's why you're trading in a range. People clearly are not quite yet. They're still scared. They still see recession. And as long as recession fears are out there, people are going to stick with safer assets. They're not going to be putting their money in very risky assets. Currently, the tech rally that we have is literally being sustained by like 10 stocks. Your Apples, your Nvidias, all your high flyers, Facebook, basically any tech stock that is flying, right? Apple is damn near at its all-time high, right? You are so close to hitting all-time highs again on Apple. So it's literally just those few stocks that are keeping the tech sector up, and the tech sector is what is keeping the market up, right? Not so much the S&P 500, but the NASDAQ. There you go. Boom. So you can see how the tech sector looks very similar to the Qs. There you go. That's where your rally is coming from. Healthcare is down. Let me see. We know energy's down. We know financials are down. So as long as we get tech and healthcare staying higher than its yearly opening range, then there is possibility that we stay range bound. But if we could get, the energy sector, if we could get a couple of these sectors to become bullish again, then we could expect prices to go higher on the S&P 500, which would cause a pretty big short squeeze. Because we know from COT data that most people, well, not most people, but effectively the short position that is on right now in this asset is almost as big as it was back in 2008. So if we got any bullish prices after, or any bullish price action after that, would absolutely cause a short squeeze, which would be good ultimately for risk assets. And as of right now, Bitcoin is still traded as a risk asset. So, not really seeing a whole lot of, price action based on Bittrex's filing, but this could be because of Bittrex, right? Because like I said, that should have been bullish data. The CPI print should have been bullish. We should have seen a breakout once we got above these prices. What we didn't. So, here, this is when the rumors started happening of Bittrex, but it hasn't been a massive sell-off either. Even though now the news has broke that Bittrex is indeed filing bankruptcy. So I don't really care too much about the news. I rely mostly on price action. That's how I trade. So basically what I'm looking for this bullish rally to be sustained is I want to see demand. If we liquidate 26,500-ish, if we liquidate this swing low right there, I want to see demand kick back up. And I want to see bullish price action. I don't want to see choppy, small range candles. I want to see a wick below that and then a close back above. And then I want to see bullish days. Boom, 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 boom. In order for me to basically think that we're going to see higher prices before the halving comes into play. So if it's not, if this is going to be a sideways year, which could absolutely be, because that's the way price plays out on Bitcoin during the 4-year market cycles. After you set a low, or a bear market low, I should say, which was right there on November the 21st of 2022. That was your bear market low. As of right now, was your bear market low. So as long as prices is trading above that, we'll be sideways until the halving. And that means you could trade all the way back down to the yearly open. Now, I won't like that because I will lose a substantial amount of money, considering that I got long at 16,531 and made a lot of money in that rally. So I don't want to lose that. So, later on in the future, depending on how this thing trades, will determine how much of my HODL bags I cash in. And I'm not looking to do that just yet. I'm still holding the entire position on cold storage, essentially. And then I have what capital I have on Bitget is just trading capital. That's the capital that I use to make more Bitcoin by trading Bitcoin. So, as far as it going up or down, it does not really matter to me a whole lot. If it wants to go to zero, I will short it to zero. If it wants to go to 1 million, I will be long till 1 million. That's how you do this. That's how you make money. You trade in the direction of the asset. I took a short on Ethereum the other day. Let me pull it up on Bitget over here so I can see where that short entry is. The short entry is at 1926. So that means I took a short entry on this day here on this spike up into the daily high. So I got short essentially when we made a new fresh daily high on this day. That's when I took the short position. And now we're into support. You're into weekly and daily support. Well, you're trading below weekly support currently, which has basically held price for 4 weeks. We are trading under it, but it's only Tuesday, so you're early into the week. This weekly range is going to expand to the upside or to the downside. And currently, the way things look, it does indeed look like it wants to head to the downside. You still got a little bit of room to go to the downside before Ethereum tags its 21 exponential. So this bearish candle's wick low is basically right where that is. So 1720. We don't want to see it go under that. If we do, we want to see some kind of price action like this, right? If you do get under it, you want to see that demand step up. If demand doesn't step up here, then that's going to be probably more bearish than bullish, in my opinion. That's typically where the algos will start to buy. That's typically where investors will look to re-enter their positions, because professional traders take profits when they're in the right direction, especially considering, that these assets have moved up a substantial amount since the yearly opening range, right? Moved up quite a bit. So you got to take profits when you're in profits. I've taken those profits and just moved them over to cold storage, but now it's getting to the point to where it's looking like I may have to take some profits out of cold storage, as I am too. If you like, I'm getting to the point to where now, since I've had such a couple of successful years, it's getting to the point where I have a substantial amount of money, and I don't want to lose that, right? That's why we trade, to make profits. And yeah, so we'll see how it goes. We'll keep playing it near term. We'll keep trading the near term ranges and, the near term trends. Bitcoin's near term trend, unfortunately, was unable to break to the upside. We did have a period where we were trading above it for a little while, but that sell side came in heavily, and you've seen a consistent 3-day drop once you got above that. And you did break the near-term uptrend. This was your near-term uptrend right here. So, I mean, that is a pretty good break. There is a longer trend line that basically measures the whole range, and that's what it looks like. So, yeah, that's what you've been trading in for a long time. Many weeks we've been trading in this range, and it's getting boring. So I want to see it break down or break out, up, either way. But I want it out of this range. This range is starting to get despicable. I don't like it. It's boring. I want to see different prices. But those short positions, I already took profit on this short position. Obviously, I took profits on the same day, as that's how I do it. And then I just leave a smaller position to catch any downside continuation that may occur. That frees up capital for me to also be able to take other positions in other assets, right? Right. So that's why we take profits. We don't want to keep our capital tied up since we don't know what price will do. Obviously, you will make much more money if you keep the entire position on and you catch a massive downtrend, but you don't know that it's going to continue lower. Like I said, this thing can turn right around and become very bullish again. All we need is demand to show up. And unfortunately, that demand just has not shown up. So let me get back over to Bitcoin on the trading panel so that way I can see what's going on here, as I want to manage my risk. I was looking for 27,549 as my bearish target on the day. It hasn't got there yet. Not a lot of chatting going on from the few ledges. What's going on? Everybody just listening? All right. So happy to be at the world famous Trade Talk channel. Good evening from Jumtien Beach. Good evening, my friend. Welcome. Good morning, Mr. Tom. What's up, Brian? And everybody else. The 200-week SMA hasn't been tested around 26K. No. Let's pull it up. I don't have it on that chart. Let me go to this chart. Let's pull it up. There it is. So, I mean, it's coming in roughly around 26, around a little over $26,000. So, yeah, that could be another place. That's similar to the 21. Very similar. All right. And it's this thing, it's possible that the 21 gets up here before price gets down there. It is possible. It is possible. Like, say if tomorrow's CPI is a non-event, like if it comes in at 5%, which I would take that as bearish, because that means that inflation has become sticky at around 5%, and the Fed's target rate is 2%. Now, the market is pricing in here. If we go over to the bonds, let's pull up the 1 month. Let's get rid of the moving averages. All right, so here's the 1 month yield. You can see that you got a big spike there, up to 5.4%. If you put the Fed funds rate up against this, you can see that it clearly follows the Fed fund rate, right? The Fed's fund rate is sitting roughly at about 4.83. So the market could be pricing in another rate hike based on Friday's move, right? Let's go to the daily and you can see there's Friday. That's when you got the spike up. Why on Friday? Because Friday was non-farm payrolls. Remember, as long as the job market stays good, that will basically say that the Fed still has room to hike rates. So that could be the market pricing in another 25 basis point rate hike. Whether they do or not is, well, up to them. But the market could price that in, and if they don't, then you could imagine that would come off, right? That would be a pretty good selling opportunity. So we'll see what happens on that front. Well, we want to X that. We don't want to just get rid of it. We'll see what happens on that front. We were looking this week during the members only live stream. The FX pairs that we were going to be watching was Aussie yen and New Zealand yen, and we were looking for bullish price action, but we needed a pullback. This was Friday. You can see Monday when we opened, we shot higher, so that didn't give us an opportunity to get long. I don't like this pullback, and I'm not going to get long in front of the CPI print. All right, I want the CPI to come in, and then Thursday we'll have initial jobless claims as well as PPI. So a lot of data coming in Wednesday and Thursday. Those are going to be the 2 days where we get most of our volatility, if we get any volatility at all from it. The market wasn't pricing in a lot of volatility for this week. The market is literally pricing in an unchanged on the CPI, but we'll see if we do initially get that break out. We need the dollar to break out of the range, and then that will basically dictate where this thing goes. If the dollar breaks down, which is what I want to see, then we will continue to look for New Zealand and Aussie yen longs. You can also look for Aussie dollar longs if the dollar breaks down. That would also, Aussie and New Zealand are basically looked at as risk on assets. So take that as you will. Like in the currency market, when there's risk on, these things usually do good. When there's risk off, these things usually do terrible, right? So you can see during the bear market, yeah, didn't fare so well, right? But it's been in a very long-term range here as well. If you look at the monthly, you can see it's kind of not doing nothing for several months here. So ultimately, I would like to see us get a breakout, but you do got monthly supply setting just above last month's high. So you could see a liquidation occur from last month, tagging that supply. That could also cause, some sell side to kick back up. Right? So that's another thing. But whichever direction it wants to take, we will look to basically play it. You are currently trading under your yearly opening range, but you're getting very close to getting back to it. So getting back above it would look good for risk on. We'll keep our eyes on New Zealand dollar as well as Aussie dollar, but we're looking to go long New Zealand yen or Aussie yen, and that is specifically if the yen continues to be weak. All right, everybody knows that Japanese yen and the Swiss franc are risk off assets, although last year during the bear market, it was not treated as such. It did not trade as a risk off asset. It traded as a risk on asset. It got melted just along with everything else because we know that the money, everybody's money went into the dollar, and that was it. It didn't go into the VIX. It went into the dollar. So that caused a lot of problems for currencies. So we'll see if the yen keeps being weak. If it does, ultimately my USD JPY short will be taken off, right? As long as we're trading lower, I'm going to end up closing the majority of that position. So that way I can free up some margin, and we'll leave a small portion on to catch any strength. But it doesn't look like it's getting stronger. It looks like it's getting weaker. When you get your bounces, you want to see the bounces higher, not lower. When you see lower bounces off support, it generally looks, or you generally treat that as eventually support is going to break, which is why for a long time I actually thought the dollar was going to break down, because it's been trading at support for a very long time and it has been getting lower high bounces. So we want to see the dollar basically rotate back to the downside, and we want to see it break down. If you look at this on the month, you broke down last month. You got to close below support last month. That just marks a short position on the dollar. Here, that candle broke down below support and even longer term support. So this monthly candle looks like we're going to see, currently, the way it is structured, it looks like we're going to see downside continuation, as we were able to trade up, but we got rejected and we're back down to this candle's close, which that's where we want to see this thing reject. Notice how that lines up beautifully with that supply. This is where we want to see rejection. All right, so it is getting to my profit target. On Bitcoin, I just hit my profit target. So I will exit 70% of the position. And we'll let the rest ride. Free up capital, because tomorrow's going to be a big day, right? We don't want to. Let me do it this way. All right, so there we go. So yeah, we're gonna leave 30% of that position open to see what happens. I just got taken out, roughly with the leverage that I'm using. That was about a 27% return. All right, so not bad. We're setting in 2 short positions on Ethereum and now Bitcoin. So we're doing good. Doing good. I told everybody during that live stream that we had for the channel members and Patreons on Sunday that they could look for short entries right here, as that is the yearly supply. And then if I go over here, so this is Saturday. Sunday, we had the stream at 11 a.m. But if we drop down here to Sunday, 11 o'clock, that's when we had the stream. And I was basically saying, you can see how we're having trouble right here at the yearly supply zone. If you want to look for shorts, this is an area to do so. And you can see you could have taken that position all the way up until 5 o'clock on Sunday, 5 p.m. So we had the stream from 11 to 12. At 4 or 5 o'clock, you could have taken that short trade. And that would have been a nice one. All right. We operate off of objective levels like that because it makes it easier to manage risk. That would have been a beautiful short entry. I myself did not take it. I took the short trade on Ethereum instead. So at that time, I didn't take it. But we just took this one. Obviously, it's at support, so I'm not going to hold the entire position down here at support. You have ascending trend line support there. You have weekly support there. You're trading at weekly support currently. And then daily support is where you've bounced. There's daily support. Weekly support, daily support. So it's into support. We typically don't want to short into support, but that was a pretty easy trade to take. Right? And it was profitable. All I was looking for was the range. That was the entry. Here's the hourly. This was my profit target. Just under what? Daily support. Okay, that's why that was my profit target. I don't expect price to trade under support. It can, and sometimes, it might, or even often does if the trend is going to continue. But, that's the way to manage risk. You don't expect price to break down. You take your short trade and you take your profits based off of this candle here. That's intraday support. That's also lined up with daily support. So that's the entry, that's the exit. And that's the same way I trade every single day. I was looking at this candle, even though it did break out above intraday resistance. I was looking at this candle as potentially being a trap. Right? I don't want to put too many lines on the chart because I don't want to confuse people. But it's just objective. We just trade objective levels. It simplifies things. So this is hourly resistance. All right. This is your daily open. You set in a low of day. Then you got this pop, made a high of day. Then you traded inside of it till you liquidated the low, made a fresh low. Then you bounced right back up. Boom. There's the high of day, fresh new high of day. Also closing above resistance. So I took the short trade expecting this candle to be a trap. And that was my target right there. So it took 1 hour to play out. Boom, boom, in, out. 27% return. And I'll hold 30% open to see whatever happens next. But I expect sideways price action pretty much until tomorrow, till 8:30 in the mornings when we'll have CPI. We'll probably be live for that. Yeah. Clipper 70 is asking where was my take profit. I just explained all of that. Daily support was also intraday support, was very close to that daily support. So that's where I took profits. Because people will get long here, right? People will expect daily support to hold. I mean, sorry, that's weekly support. I wrote daily support. That's weekly support. My bad. And the higher the time frame, the more, the more potential it has to hold. And you could trade under it for multiple days, but the weekly close is what's going to be important. Obviously, it just being Tuesday, you could clearly break down. You've already had a pretty sizable range, considering that this week's only been open for a couple days. So what I would love to see is like a 4.7 or a 4.6, which obviously that's me dreaming that I'm going to see a 4.6. If I see that 4.6, I want to see Bitcoin to go up on the inflation or CPI print, as that would be well under a 5% expected target. And that would also mean that the Fed could potentially pause their rate hikes, because rate hikes is pretty much bearish. Obvious, but Bitcoin hasn't been acting bearish to those rate hikes. So it's a difficult market to trade, and it's not just for me. You can look at any analyst, any guy, anybody, any long-term macro investors out there. They're all split. It's like 50-50. 50% are bullish, 50% are bearish. And of course, you got your Bitcoin haters out there that think Bitcoin's going to ultimately go to zero. So yeah, which they've been wrong for many years, obviously. But yeah, we'll watch that. We'll watch that 200-week SMA, Mr. Tom, for sure. I took the stop loss in profit, and 75% I took in LOL. Good job. In that case, would you wait for a bull trap to show itself before taking the 5 p.m. short? I don't know what you mean by that, Andrew. I don't trade at 5 p.m. I only look to trade during the New York session, usually. I mean, it would have to be like at a very important level. Oh, I see what you're saying. You're talking about Sunday. Okay, I got you. In that case, would you have waited for a bull trap to show itself before taking the 5 p.m. short? No, I mean, because it had already failed multiple times, like all day. This was the bull trap right there. Boom. You closed above it. Right? This candle took out the low of that, so that ultimately made that the trap. So basically, any one of these wicks into it could have been, that's where you would have looked for your entry, and your take or your stop loss would have been just above that trap, the trap high. So the trap occurred during the live stream. Right? So at any one of those times, you could have taken a short entry at that exact price and then just used the trap candle as your risk. Which, as of like right now, my risk is just setting right where I took the entry. And the entry was right there. 27821. On Bitget exchange, that price is 27793. 27793, which is right in here. But it's the same. It's this bullish daily close. It's just on the Bitget platform, that daily candle closed at 27793. So I use 27793 as my entry. Right there. This is an old resistance, is all it is. It acted as support here. Right? This is your old resistance. This is the breakout. You got bullish continuation on this down push there. You ultimately closed back above, so that was a test of old resistance. and it held as support. Then you went up, then you came back down and closed under it with a push as low as that. So that's why I took that, because it's the old resistance area that acted as support. Here's the breakdown. So any retest of that is a potential entry. Objective. It's two different prices, but it's the same structure. It's still a bullish close. That bullish close. Let me see if I can get Bitcoin. I literally thought that would make it alphabetical. There it is. See, it's even different on the Bitget exchange. But on the current, like on the actual Bitget platform, it's the same structure. It's just a different price. Here it's 27811, but on the Bitget platform, it's 27796. So it's a couple dollars shy, if you will. But it's also the perpetual futures contract, and this is spot. So there is differences in futures contracts with price than spot markets. All right, let's look at Glassnode. We should have another day here. So we got a spike up on this down move on your addresses with over 10,000 Bitcoin. I don't know if that will ultimately be bullish or not. I don't know if that controls price or not, or has anything to do with price at all. But we had been trending lower. And then, boom, spike up on this down move. Also, there was a spike up on the 1,000. Boom. See this? This is a spike up. As price is going lower, you can see a spike higher in number of addresses with 1,000 Bitcoin. So I don't know if that's bullish or not, but I would rather see this going higher than lower, because it had been going lower. And then obviously your shrimps or your smaller accounts, they're always going to be going up. Always going up, no matter what price is doing. Here's 1 Bitcoin, addresses with 1 Bitcoin in them, going higher. And I mean, like, if I pull this out, it's always been going up. So you do have investors, just not the big ones. You can see how, like, the big ones have topped out, essentially. $1,000 has made new push. We're finally getting a tick up. So notice how it tops out at the top and then starts to go lower. That's profit taking. That's just the way I read the chart. But I could be absolutely wrong, because I am not a Glassnode analyst. I'm not afraid to admit that, right? I'm a price action analyst, the best in the game. Here's the accumulation trend score. You can see it hasn't been much accumulation happening, although there was a lot of accumulation happening at roughly around the $27,000-$28,000 price range, and there was a ton of accumulation happening down at the lows around the yearly opening range. But that doesn't mean anything because, like I said, we've seen accumulation be very high at the top, the very top of the market. Massive accumulation taking place at 64, 65. Look, people buying at $67,000. That's literally buying the all-time high. You don't want to do that, ladies and gentlemen. You want to buy in the lows, in the gullies. Where's the M? Oh, there it is. That's when we essentially stopped being bearish on Bitcoin, was when we got into this green zone. This is the accumulation zone. This is when you want to be a buyer on Bitcoin. So when we got in it, that's when I switched my bearish stance to bullish. Core CPI looks hot in the Cleveland forecast. I don't know if hot means good or bad. Never ever say Bitcoin and fail in the same sentence. Bitcoin fails at resistance quite often, my friend. I know there's a lot of people out there that love the asset. I myself am a trader. I trade Forex, I trade stocks, options, and Bitcoin. Altcoins. I don't care what the asset is. I will trade it, but I definitely don't love it. I don't fall in love with the assets because falling in love with an asset can definitely get you wrecked. But yeah, I've done really well on trading it. It trades pretty simple. It was trading pretty simple. Let's say that. This is just a difficult year for traders. I mean, all traders. Because the market is doing very strange things. You're seeing risk off sentiment as well as risk on sentiment. So it makes it very difficult when the market is showing both sentiments, and both sentiments are paying. Hot means high. So higher than 5%, that would be bearish. So Bitcoin could simply be pricing that in. Hopefully it finds support. I want to see it go much higher. I still have a big hodl back. I want to see Bitcoin reach $1 million a coin. Absolutely. Who doesn't? I mean, link is there. I don't see the link, my friend. You have to be a... Let me... All right, try to... Now you can try to put the link in, Tom. As I just made you a mod. There it is. Yeah. I'll keep this up and I'll take a look at it after a little bit. But yeah. Updated 5.9. Core PCE inflation month over month percent change. And then here is the year over year percent change. That would be over 5%, 5.4%. They were pricing in high 5.5% in April, and it came in at 5. So they don't always get it right, but I appreciate the link. All right, you guys, I'm gonna wrap it up. Thank you all for being here. As always, if you have any questions that I missed, or if you're watching it in replay and you have a question, just as always, drop it down in the comment section. I will read it and get back to you. And we'll see y'all tomorrow at 8:30 in the morning, as that will be when the CPI comes out. So we'll be looking to see if there's any volatility or any tradable events that occur during that time. So make sure y'all show up. I'll start streaming about 8 a.m. Eastern Standard Time, as the report will be out at 8:30. And if there's any news or anything to go over before that, we'll talk about that stuff. So you guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.